Hello financial investors and welcome to the channel. Today we are going to be doing our stock market weekly recap for the 29th of June through the 3rd of July. Today is the 4th of July, so first of all, happy 4th to you guys, happy Independence Day. Hope you guys are having fun, being out active with your families and friends, and all that fun jazz. And today what we're going to be doing is doing our stock market recap where we take a look at the performance of the four main indexes, take a look at the entire S&P 500, what stocks were up, what stocks were down, which individual sectors were stronger or others. Then we'll go ahead and cover the oil, dollar, silver, gold, bonds, current bond yields, and the mortgage rates. So everything will kind of get tracked. I like to do these for historical reference. That way we can kind of see where the market has been in the past during this pandemic, and if this happens in the future, we can go back, take a look at what exactly happened during these times and do some comparison. I think it'll be a lot of fun. I've never gone through a pandemic in my life as far as, having to wear a mask everywhere I go. So it's definitely been an interesting time. So with that said, if you are brand new to my channel, I would really appreciate if you do head down below, hit that subscribe button, hit the thumbs up, smash that thumbs up, make it blue. And of course, if you would love to leave me a comment, I'd really appreciate it. Drop a comment down below, say hello. What do you think of the current stock market conditions? Do you think that the market is heading to some new all-time highs? Do you think that there's still some resistance out there and that will be kind of trending sideways? Or do you think the market will fall down? I'd really like to hear you guys' thoughts, so go ahead down there, drop me a comment, and let's go ahead and get into the video. So last week, 22nd through the 26th of June, overall, the market was down. S&P down 2.86, Dow Jones 3.31, Nasdaq 1.9, and the Russell 2000 down 2.81%. While the indexes were down, silver, gold, and bonds were all positive. 10-year and mortgage rates were also down last week. So the 10-year bond yield dropped from 0.7 to 0.64, and mortgage rates are continuing to fall. If you are not a homeowner yet and would like to be, this is the time to go out to your local credit union, to your local bank, ask to get pre-approved, see what you can be approved for, and start looking on the market, because there is lots of properties where you're getting able to get locked in at a 2 to 3% rate, where essentially you'll be able to own a property that's yours in 30 years, 15 or 30 years, depending on how long you like to keep it. You're basically putting money in a savings account for yourself. You're building an asset for yourself, and rates are so low, between 2 to 3%, that with inflation and appreciation in your property here, it's just going to continue to build appreciation. It's crazy. So I do believe everyone should be a homeowner, especially if you're going to be in any area for over 5 years. Now, with that said, I don't want to go into too much detail. I started recording, and I was going over a ton of detail here on all my posts, but that is not what we are here to cover today. So let's go ahead and jump over into the market. So S&P 500 this week up 1.5%. Job numbers came out on Wednesday, really pushing this market higher. That was actually a surge of new jobs on the market, which really surprised. The numbers were out there. I believe it was 4 million or so are back at work, and that was a surprising number to the overall. So that spiked the market here on Friday open. We can see we had a huge spike up to the upside on the open, and it did downtrend throughout the day, but still overall positive by 0.45%. Friday, we had a bit of a sell-off here, and then Monday kind of started up. So it was a really interesting week here. I'm sorry, Thursday, it kind of popped up and then kind of trended down to the low. So this is kind of interesting. I am not tracking if the market was open or closed today. I didn't really look at the market, so I guess I should know. But there we are. I don't know. So here overall, 5-day change up 1.5%. The Dow Jones here up 0.32%. So again, positive job numbers here causing that spike here in the morning as job numbers are released, and then downtrended for the rest of the day, but overall still ended up positive there on the day, recovering all of Wednesday's losses of 0.3. So essentially there, really nice week. But overall, there's a big difference between the S&P 500, the Nasdaq performance, and the Russell 2000. You can definitely see some weakness here within the Dow Jones. So this one underperforming the other indexes by over 1%. The Nasdaq this week beat all the indexes out of the water, quadrupling all of their returns. The East one continues to put on, percentages, dollars. So this one just broke back over 2,000 points here this week and continued to put on additional points here, ending the week here at 10,207. So we can see here the high is 10,310 here on Thursday spike in the morning due to the job numbers. Year to date, it is up 13.76%. So it is very close. It just hit a new all-time high today, but it is still very close here, and it is still continuing to move higher, which is just amazing there for the Nasdaq. Now the Russell 2000 here. This one's really interesting at 1.31% up this week. I don't know why on Wednesday here. Maybe they were expecting job numbers to come in lower for a lot of these small mid-cap businesses. I think that's why Wednesday was lower on a lot of the indexes. Is that going into Thursday on the job numbers, they were expecting job numbers to come in lower, and here job numbers spiked it. You can see a huge spike here to the upside on Thursday morning, and then downtrended for the rest of the day. I went out there, supported some local businesses. My buddy texted me up saying, hey, do you want to go grab some tacos? And of course I can't turn down tacos. So we went out, put on our face masks, our hazmat suits, and walked out the door. And there was absolutely no one at this taco place here. So we had some tacos, enjoyed ourselves. We basically owned the whole establishment, which was very cool. And then we walked out there with our masks on again. So overall, right here, futures are down, but again, this can all turn around here by Monday open. Right now, stock market's completely closed going into the 4th of July. Markets will reopen on Monday, and we may see positive, we may see negative. Again, we were downtrending here on Thursday, so we may uptrend again once the market kind of opens. Tesla again broke over $1,200. I think they hit 1,260, somewhere around there. But it's crazy on Tesla. Now, this is the 1 week performance here. 1 week performance, if you guys haven't checked out this website, it is finviz.com, finviz.com. They have a heat map where you're able to see the entire S&P 500. I really like to watch this one. When it's active, when the market is open, check out this heat map. You can see all the digits moving all around. Now this week, check out Pfizer. This was our Monday buy. Pfizer up 6.78%. We also purchased some AT&T here, up 1.21% this week. So whenever you have these positions such as Pfizer, AT&T that are in the negative, that are in your portfolio, always a great opportunity to buy them. Now, if you look at the S&P 500, you do see some weaknesses out there. Now, which companies were hit? Which companies out there look really bloody? The whole financial sector down here. Now, not credit services, just the banks. Now, these were stress tested this week, and I posted this over here on Facebook right here. So JP Morgan, Bank of America, Citibank, Goldman Sachs, and Wells Fargo all were post-stress test. Wells Fargo does have to cut their dividend, so they've announced that they're going to be cutting it. I forgot by how much they have to actually cut it, but that's why the whole financial sector got slammed. It's really interesting that even though they passed their stress test, JP Morgan, Bank of America, Wells Fargo, Citibank, all negative by over 5% there besides Citibank. I saw investors buying up JP Morgan. I was actually considering buying up JP Morgan on Monday, but I do believe that rates are going to continue to go lower here in this current market. I don't see, that's their way of generating cash. They loan money out to investors, to individuals, and they put a percentage on it that they get in return. Right now, you're getting offered a 2 to 3% rate, so there's not a lot of cash available for these businesses. There's other means of providing services for cash, but they're just continuing to get hard. So banks, I think there's still more room for them to fall. Oil this week up 2.86%, ticker symbol USO. Remember when this one did a reverse split and went from $2 to about $17? Check it out now. Put on $10 since that reverse split. The dollar this week moving up. Actually, I think it's moving down. So it started the week around 97.47. It was downtrending last week as well. It started around 97.60, downtrended to 97.47. Here this week, continued to downtrend just slightly here to now 97.15 here at close. Silver, gold, and bonds all positive this week. So silver up 0.75%. Year to date back in the positive here for the first, no, not for the first time, I believe. Let's look at the year to date here. That they were positive at another point. Yeah, early in the year they were positive prior to that little fall in March. And as of that point, they've only really hit back positive here just a few times. Gold this week up 0.69. I do feel that there's going to be resistance. I think this one has been having some resistance here in this area. Yeah, it's kind of just trending around about the $17. So silver and gold, I think that those are kind of hitting some resistance there. Bonds up 0.31% this week. This one also went ex-dividend here on the 1st. To be paid on the 2nd of July. So it's a very quick turnaround. It's basically like having a high yield savings account, because as long as you have capital in there on the 1st of the month, they're usually paid out on the day after. So it kind of works very similar to how a bank account works. And bonds, bond rate this week moved up from 0.64, I believe it was. Yeah, 0.64 to now 0.67, so it is uptrending by 0.04, yeah, 0.63, 0.03, so 0.03 difference there. So that's usually pretty positive there to kind of see the 10-year yield move positive. And mortgage rates, again, if you are not going out there and getting pre-approved, if you want a home, go out there, get pre-approved, talk to a couple agents, interview them, see which ones you like to work with, and start making some offers. Look for your home, your home away from home. And this one continued to fall, so I'm still getting offers in the 3% range, but I am refinancing my own home to 2.75. I don't know why I'm doing the refinance now. I did the whole refinance of going through the whole phase, and we're also looking for another house, so I have to do a contingency on this home to have it sold prior to buying our new house. So the whole thing here, we're gonna have to have this house on the market and sell it. And our new house I think we're just going to have one built in the future, because I was talking to somebody and I think we're going to be going that route. So this house was completely brand new when we moved into it, and I think we're going to be having our next house kind of built out completely brand new as well. We did post a couple screenshots. We purchased Pfizer and AT&T this week. If you guys were watching our Monday video, very interesting, why we decided to come up with those instead of JP Morgan, and I believe there's one other one, I think it was Caterpillar. June dividends, let me know in the comment section down below. Do you like to see the dividends that were paid out and where they were paid out from? There are a mixture of accounts here, so all the individual holdings, Walmart to Waco Group, those are all within my wife's M1 Finance account. I do own the Vanguard VIIX fund. This was in my Roth 401k, my work plan. I've only had that account for about 2 years or so, so it's been doing really well the last few. It basically tracks the S&P 500 performance. And then I have SPLV between my Merrill Edge and my own M1 Finance account, and I have SPHD over on the Merrill Edge platform. So I do have a few positions in here that are monthly pairs. So we have Main Street Capital that pays every month $4.94. We have Realty Income that pays every month $3.01. SPLV is a monthly paying monthly paying ETF. That one pays about it pays $20.92, but it does fluctuate on a month-to-month basis just because of the holdings within it. And then SPHD pays around $3.80 on a monthly basis. So every month I do make about $30 of consistent income, and then the other ones are kind of sporadic. So this month in July, I have Avi, which will be a nice chunk of dividends, and there's one other that I'm hoping for as well. And there's that video for Monday. So I thought this was an interesting topic. If you guys want to hang with me just for a little bit longer, a lot of companies, I'm involved in a lot of Facebook groups. I have my own Facebook groups. I'm trying to be a bigger part and have more chat involved in there in my own Facebook group. So if you haven't checked them out, I think I'm going to be closing down the standard stock market one and the real estate one, because my main focus of just investing was, while I still like capital appreciation, obviously I want to track the markets. I still just kind of like the whole mentality of the dividend income. So I still will be posting and contributing to the dividend investor group, but I do believe that I'll probably shut down the real estate group and the general stock market group. I'll have to think on that, but I don't think I'm going to be keeping the real estate group up for too much longer. Now, if you are ever part of a real estate group or a dividend group, these groups don't like it when you really kind of discuss other topics that are not either dividends or real estate. So if you post about your real estate in comparison to your dividend info, the comment section gets shut down, your post gets deleted, nobody wants to hear it. So I thought this is kind of an interesting thing to kind of throw out there. I have two different types of, I do many different investments, but I do the stock market portfolio and I do real estate as well. So my stock market portfolio has, it's somewhere between $70,000 to $85,000. I did pull about 80 or 90,000 back in 2018 to start my real estate portfolio. So I started that back in 2018, and the stock market portfolio averages around $200 per month. Well, that's what I kind of just averaged it out at. That's about $2,400 every year. And I took the average here, 70 plus 85,000 divided by 2, gets me an average of 77,500. And I divided 2,400 by 77,000 and got a return on investment of 3.10%. And that's just the average yield for this account, or for these accounts. Now there's some appreciation in there too, but I don't really count that because that money is going to be slish-sloshing positive, negative. And a lot of times I don't really plan on selling positions unless I see that there's some resistance and I can just kind of sell, rebuy at a later time. Now my real estate portfolio, I purchased one home for 90,000, put about 14,000 into it, got it reappraised at 130, pulled I believe $97,000 out of it, left about $6,000 into it. And then my other property, a duplex, I purchased for $76,000. I fixed it for $16,000. It got reappraised at $120,000. I pulled $97,000 out of it or so within that area. So I left about $6,000 or $7,000 into that one. Now, my own equity invested between these two properties is around $13,000, and they both produce, all the duplex with the single family home produce around, well, it does produce $2,730 in monthly rent. Now, of that, I have two mortgages, which is about $1,000 together. So that leaves me with $1,700 minus other expenses such as property management fees, setting aside cash for miscellaneous expenses that kind of pop up throughout the year. That leaves me with about a net income of about $1,000 every month. So I put $1,000 by 12. That leaves me with $12,000 of yearly income, net income. Now I take that capital divided by how much of my actual capital is invested in these companies and these properties after I pulled my cash out during the cash out refinancing phase. I get a return on investment for my cash of 94.12%. So the whole real estate method is definitely the way to go. Like once you hit a certain amount of equity, or if you can borrow it, if you can get a HELOC on your own personal home, get enough capital from the stock market investing to begin buying properties, you can really go really quickly, adding to your net wealth by $30,000, $50,000, $100,000 by every property you buy. You're constantly getting more capital. Now in 2019, I didn't make any real estate purchases, but this is definitely something I want to start back up. Maybe here in 2021, after I purchase my next home, my own personal home, I'll be selling this one. I'll get a substantial amount of tax-free capital, tax-free cash on this one, just because I've owned this one for 7 years. If I sell this one 2 years after I move out, the rules of it's completely tax-free. So I don't have to worry about paying any taxes in the home that I'm currently living in once I do sell it. And then I'll be able to use that capital to continue my real estate journey. Now I did list 3 books here, which kind of cover the whole BRRRR, which is buy, rehab, rent, refinance, and repeat it. And that's essentially how I purchased my other real estate properties. So this is a good little comparison. Let me know in the comment section down below if you guys stood and would like to maybe see a video on that in the future of the differences there, maybe more in detail, what kind of questions you would have. I can answer that during the videos. And of course, we've already discussed the changes for the 29th of June through the 3rd of July. So those are the weekly changes posted there on Facebook and over on Instagram. And that is going to be it for this video. If you guys did enjoy this video, again, give this video a thumbs up. Make that thumbs up button blue down below. Subscribe to the channel if you have not yet subscribed. And comment down below, what would you like to see in an upcoming video? Would you like to see some more stock market videos? Anything specific to dividend investing, stock market investing, or real estate investing? You know, I'd like to hear from you guys. And that is it. Thank you all for tuning in. I hope that my mic is a lot better. I had a comment in the last video that my mic wasn't doing so well. I did adjust my settings on my OBS. I found out how to increase my volume on there, so hopefully it turned out a little bit better in this one. So let me know down below if the volume's better, if you made it all the way to the end, and thank you very much. I will see you guys next time. Bye.